Benjamin Graham was a famous investing professor at the University of Columbia that is often referred to as the father of value investing. He mentored arguably the most successful investor of all time, Warren Buffett, and wrote the famous book, The Intelligent Investor, which is now often referred to as the Investor's Bible. From it, here are 3 of Benjamin Graham's investment approaches to try and beat the market over a long period of time. Number 1. Graham said that large companies that are going through a period of unpopularity often make great investments. The reason is that large companies are less at risk of definitive loss of profitability than smaller companies, and they have more resources in capital and brain to carry them through periods of adversity. On top of that, the market is more likely to respond with reasonable speed to any improvement shown than smaller companies that might be overlooked. Number 2, Graham believed that buying bargain issues at low points in the general market is another key pillar for potentially achieving successful results, because he explained that the market is always either overvalued or undervalued, which can propel the price down to absurdly low levels, which can make it very profitable for the investor if and when the stock bounces back. Graham specifies, though, that this can only work for good companies that have exceptional fundamentals, including variables like no years of earning deficits and enough financial strength to meet possible future setbacks. And number 3, this is only relevant for a smaller number of people, but M&A, where you buy an existing company in a field that you're trying to get into, rather than starting a company from scratch, can be a great profit-making opportunity. That's because if well chosen, the company can be sold for more in the future, and even be a great cash generator for the buyer. Overall, Graham believed that the market will always create bargain opportunities, pushing prices down to unduly low levels. All the enterprising investor needs to do is identify them.